Hello, investors and traders, and welcome to the Midweek Market Report. I'm AJ Monte, Chief Technical Analyst with StickyTrades, and we are approaching the 1 minute mark before the close. As you can see from this daily candle chart in DIA, we did get the bounce that I was talking about last Friday. If you like, you can go back and listen to the recording for reference. But we were talking for the last couple of weeks, actually, about the ABCD pattern, where at the top of this chart right here, we have A. We did have the pivot higher from B, but look what's happened since B. We have a higher low, higher high, higher low, higher high, slightly higher low, slightly higher high, and today higher low, higher high. So we cannot put a C there, at least not yet. What we need to see over the next couple of days, or maybe even tomorrow, is a pivot lower, which would mean a lower high and a lower low, at which point we will be able to put a C there, which then leads us to a lower D. And that's how an ABCD pattern works. And that's why I still have this downside target on the diamonds at 379.61. All right, we're coming up to 5 seconds right now before the close. Let's take a look at IWM, and here we go. There is the official close. Now, remember, I had this target here, and then the downturn. We're obviously bumping our heads against this resistance. So IWM, unlike the diamonds, is stuck pretty much in a narrow trading range right here. And today we bounced off of that support level right here. And that support level is pretty critical because it's right near this gap fill support. See the gap right there? And so once that gap fills, we might see another little bit of a bounce at that gap fill support level. But there's really nothing here for me to report other than we could go a little bit higher to test the high right here from Monday. And then we just have to sit back and wait to see if we get an increase in volume at that resistance level. And so what that means is if we are approaching resistance tomorrow or possibly Friday, and you start to see the volume increasing as we're approaching that resistance, then the likelihood for a breakout becomes greater. And then what do we face with? Another resistance level. So IWM has a good number of resistance areas that it's going to have to get through before we break out of these highs up here. And so that's something we have to keep an eye on. Now, our option traders are doing phenomenally well right now. We have 3 cash cows in the works. And I committed to our members earlier this week that by the end of the summer, I'm looking to pick up 2 more cash cows so that we have a total of 4, possibly 5 by the end of the summer. Now, what is a cash cow? If you've never traded an option in your life, let me tell you, folks, we've got an option course that you can start out with that's very simple, easy to learn. We have the StickyTrades University, and what our option traders are doing is they're using money from the market to pay for long positions. That's called spread trading. And I'm not going to get into all of the details here. It will take some study time to learn this, but I'll tell you right now, the time spent learning these are going to pay back dividends down the road. You know, education is a risk-free investment when you think about it that way. And it starts with technical analysis. We're looking at the charts. Even with a bearish put spread, we could still make money if the market goes up, depending on how much money we take in from the market. I don't want to go too far down that road because there is a lot to learn, especially for those who've never looked at an option before in your life. You start off, you practice with what we call paper money, and you just practice with no risk until you get good at it, and then you can put a little money into the market. Now, looking at the Qs, we see that we popped to this high that was never hit right here. So we did hit that upside target of 461.30. We did get this move here. A lot of this is still brought about by NVIDIA and the pre-split of NVIDIA. I think as the stock goes through that 10-for-1 split, it could push the Qs up a little bit more even from where we are. But take a look at what we see down below right here. The CCI down here is the second highest overbought reading of the year. So any kind of a drop in volume tomorrow or possibly Friday could result in the Qs pulling back to the moving average. This is not an ABCD pattern to the downside. In fact, on the contrary, this is more of an ABCD to the upside, with A right at the bottom pivot point here. You could see that we did have a pivot here. So there's B. Here is a pivot up from C. So if you're following ABCD like we have recorded in those other sessions, by the way, the links for those are in the description box below. If we get this breakout that we see on higher volume, that's most likely going to bring us to a higher D. I'll put some new target lines on there on Friday, but I would say that with the close being so close to the high today, we could see the market drift a little bit higher on the Qs. But keep an eye on this, because look at that monthly chart. This is incredible. We've had almost parabolic move here, and on the monthly chart, these oscillators down here are not looking bullish at all. So out of the major markets, the Qs are the most bullish. But then when we go to SPY and we look at the monthly candle there, you got the same bearishness coming up in these oscillators on the monthly chart. Now going back to the daily chart here, same scenario. We did hit this upside target. We're moving higher, but I am expecting pivots by the end of the week, possibly even Monday at the latest. I think we'll start to see the CCI start to hinge. By the way, the CCI, which is the Commodity Channel Index that was developed by Don Lambert back in the 80s, that is the most sensitive indicator that I use. It's my favorite, but it will most likely lead the stochastic into a pivot lower. That's the stochastic oscillator right here. So we still have the momentum going up on the Qs. We still have the momentum going up on SPY. And with that said, that leads me to the VIX. Now the VIX pulled back exactly as I said it would. Now here's what the VIX scenario looks like with regard to ABCD. Here, the bottom of the chart is a pivot higher. That's A. Then we had the pivot lower last week, which is B. We still have a lower high, lower low. We had half signals yesterday and the day before on Monday, but we have a lower high, lower low. As soon as the VIX starts to show a higher low and a higher high, then I could label C right there, which ultimately leads to a higher D. Do yourself a very big favor. Click on some of those links that are in the description box below, and you'll get that quick lesson on how to trade the ABCD. Now the VIX, if we do get that pivot point, and I'm expecting that to go higher, see where my ultimate target is up here at 1838. For those of you who are trying to time the market, you don't want to jump the gun, because remember, for the most part, the VIX is inversely related to the S&P. So if we get the pivot up on the VIX here, that will most likely result in a pivot lower for the S&P. How do you use that information? Well, if you're long any S&P stocks and you see the VIX starting to pivot up, that might be your signal to take some of the profits or maybe all of the profits out of your long position, and then wait for the market to drop before you get into the market at the lower prices. That's what trading is all about. I've been trading the markets for over 42 years. A lot of the people I know are professional traders, and they're doing very well in this market. It's a tougher time for investors, especially with the added stress brought about by all the geopolitical tensions and economic numbers that are hanging over our heads. But if you are learning how to trade, this could be a very fun time for those swing traders, especially those who are trading options. Thank you so much. Look at our YouTube page. We are approaching 11,000. Look at that. We are only 30 away from hitting that 11,000 mark. If you click on the subscribe button and you're brand new to our channel, you're helping us get a little bit closer. We only need 30 more people to get to that milestone, and that is less than a year. We've been able to go from 0 to almost 11,000 thanks to you sharing and liking and commenting, because that moves us up on the menu when you comment. and that shows activity, and then YouTube through their algorithm pushes us up to the front page on the menu, and that's where more and more people find us. I have a lot more to talk about with regard to YouTube. I'll do that on Friday, but let me just say this. We're looking to build more subscribers so that we build more ad revenue, and then what we're looking to do is spin off a lot of that to go towards charitable giving. So when you watch our channel, you don't have to pay us a single penny. The advertisers do. And then I'll talk more about that and how that's going to work, because we have some really great examples of what people are doing with their profits to help pass it forward. And so I will talk to you on Friday. Have a great rest of the evening, and I'll talk to you then. Bye-bye.